Wednesday. It's Thanksgiving Eve. Welcome to another episode of Daily Trader. I'm Alex Coffey in for Kevin Hanks. Taking a look at the last full trading day of the market action this week, seeing kind of a mixed market here. Now, the market itself has been a little bit bipolar. What do I mean by that? Well, it doesn't seem to have a day where everything's lining up over the last few weeks. It's either been a day that's been dominated by tech outperformance, or it's been one that's led to a little bit more of a broader performance. Something like the Russell 2000 is out in front. You see a greater percentage of the S&P 500 performing to the upside, and today fits the latter bill. It's one of those more broader rallies, but the tech weakness, as you look at this heat map here, some of those big squares, look at Nvidia, bright red here in real time, about an hour into trading for the day on this Wednesday, the day before Thanksgiving. You see that big square in Nvidia and some of its peers weighing on the market today. So despite the fact that here in real time, you have almost 70% of the components of the S&P 500, all those other boxes, some form of green, you actually do still see the S&P 500 down slightly on the day. And so equal weight is having a nice performance today, but cap weighted S&P a little bit weaker. It's really showing in the NASDAQ compared to the Russell 2000. The Russell 2000 is up about 0.5% here in real time, but the NASDAQ 100 is down almost a full percent here in real time. So you're really seeing that divergence between the broader, more cyclical small caps and, of course, the NASDAQ 100, which is very tech-heavy, mega-cap-centric, highlighting today. Now, we also got a lot compressed this week into today and this morning from a data standpoint. You had jobless claims, benign. GDP, also benign. Durable goods, while there were some slight adjustments from the last period's number that sort of influenced where we shaped up, it was largely in line as well. So that first data dump that was an hour before the bell didn't move the markets really at all. And then we were all on the edge of our seats waiting for this personal incomes and outlays report, which has that PCE price index, which we know is the Fed's preferred gauge for those inflation readings. It came in line both on core as well as just the headline number, both month over month and year over year. And so the market itself also kind of took that in stride. Now, we have moved a little bit lower, I think, from where those numbers came out, but it's hard to, really connect and make causality there just because the numbers didn't really show anything that divergent from the market's expectations. And it continues to show, hey, inflation isn't runaway to the upside, but it's a little bit more stubborn, working towards that 2% goal, with the core coming in at 2.8% and upticking slightly from the last month's reading. So stubborn is the word I'm using to describe inflation, but not worrisome just yet. We'll see how things go as we watch the months going forward. Fed odds remain largely where they had been. It's about a 2-to-1 favoring of a 25 basis point cut for that December 18th meeting. And so we'll see what happens in the December meeting when that does come to the point. And so that's kind of the last major catalyst for this market in 2024. And we'll see if there's any volatility delivered there in terms of the calendar. Looking to today's daily trader example trades, two heavy hitters, some market generals here. We'll start with Apple. A story out of Reuters broke basically saying that, you look at China official data and foreign branded smartphone sales plunged 44.25% year over year in October. Well, a bulk of those foreign smartphone sales within that market in China is dominated by Apple. So your first thought might be, well, this has to be weighing on Apple's shares. And while the stock was modestly lower, it's basically unchanged right now. So market largely taking this in stride. Apple, we know, super strong cash position, mega cap status, and one of the market generals. It's actually kind of bucking the mega cap trend today, as you see names like Microsoft, Alphabet, Amazon all lower, Nvidia lower as well, which will be our next name that we'll talk about. Apple, a little bit brighter day today, despite the fact that it actually is kind of oscillating around that unchanged line. Looking at Apple today, though, what you'll notice on the chart is this is still a really, really nice looking chart from a trend standpoint. It's hard to say that this particular company is doing anything but trending up. uptrend, bullish trend, depending on how you want to say that, even with a little bit of weakness off the highs. It hasn't really changed that story. You see, obviously, on the bottom there, that momentum study still shows relatively strong momentum behind the move as well. It was a little bit disappointing when it last reported earnings, but you look at that performance since, like it has been so many times in the past, buyers then come in and see opportunity on these dips to increase exposure in Apple. I got a bullish example trade to look at if you're kind of following along here and you're saying, hey, I hear you on that story. It's a little bit concerning, but a weak spot for Apple has been China for quite some time, and it's been able to outperform despite that. And maybe that can continue to be the case. You got this Apple Intelligence rollout that's happening, this new iPhone cycle that so many are optimistic about. We'll see if those can be reasons for the stock to go higher. Now, this exact trade in which we're just looking at buying a call vertical for this example doesn't need a tremendous amount of upside. In fact, it only needs the stock to move, 1% or so to get a couple percent or so to get to max profit. And so it's 232.5, 237.5, $5 wide call vertical in the December 13th expiration. So by going to that December 13th as opposed to the December 20th monthly, we were able to get $2.5 wide strikes at this time. And so that was one of the reasons that I looked to that particular cycle. It's a relatively short term trade, but we always talk about is sort of a loose guideline for these one strike in the money, one strike out of the money call verticals or put verticals that are on the debit side, to try to find a way to get that structured so that the risk will be equal. So in this case, if it's a $5 wide spread, that would mean the debit is half that and it'd be $250. Well, that's what this is achieved. So it's risking $250 with a chance to make $250. But also that second piece is to have the break even kind of be within a stone's throw of the current share price to limit that time decay working against this strategy. And we've also achieved that with this particular strike selection as well. As you'll see that break even at 235. Well, in real time, Apple stock is just below that mark. So right in line, or roughly in line, I should say, with the current share price in terms of the break even, and then also equal risk to reward. Because in theory, a stock can go up and can go down, right? And so if you're doing a strategy that needs some directional movement, trying to structure it with that risk reward equal, break even near the current share price kind of sets it up in a way that can make sense, especially if you have that directional bias. In this case, this favors the bullish side. You wouldn't do this if you were a little bit more bearish in a name like Apple. You do need a move, though. You got to get through 235 to break even. You got to get above 237.5 to get that max profit through expiration. And then, of course, all the risk below break even caps out below 232.5, limited to that 250. Shifting gears to what has arguably been the most important stock to the market over the last 2 years, and that's Nvidia. Now, Nvidia itself, not a ton of news. Now, there's always news that kind of moves around with a name like Nvidia. It could be analyst changes and what have you. But today, this seems to be more in reaction to Dell shares, which were a little bit weaker post its own earnings release. And so kind of the read through of what that might mean for this AI build out and the demand. Is it still there? Is it not? Another name, though, despite what has been a pretty steep pullback from those all-time highs, when you look at Nvidia, the all-time high just shy of 153. Doing some quick math, 153 to 133 nicely is only is 20 full dollars. Well, the crazy thing about Nvidia that always kind of shell shocks me when I think about it is roughly every $1 is $25 billion in market. It's actually slightly less than that, but just for some quick math, that means we've watched this stock go from 153 thereabouts to 133 where it roughly is now. That's $500 billion in market cap over the last few weeks, just to put in perspective how big in real dollars these swings in Nvidia are. But even with that, still a very, very impressive performer, still one of the market's generals, and still a uptrend clearly on this chart. And so say you see this as an opportunity to increase exposure in a name like Nvidia, perhaps you see a dip that may be bought and bounce back just to those old highs around 140. I have an example trade that would benefit from that exact outcome. And so what we're looking at here is a call calendar spread. So With the calendar spread versus the call vertical, for example, you got to be a little bit more precise with that strike selection. In the case of the call vertical, like what we looked at in Apple, you're looking for a directional move. You want it to go up in the case of the call vertical, the debit spread. In the case of the call calendar, not only do you want it to move up in this case, you actually want it to move to a particular spot. So it's sometimes described, and Jenny and I will talk about this on Next Gen for those who watch that program each day. It's sort of like throwing a dart, and you're trying to throw that dart at a particular spot on the chart. In this case, I selected 140. It corresponds to those previous all-time highs before we saw this leg up towards that 153 mark that I talked about. 140 was that line in the sand for a long time, and so now we're back below that. Perhaps if buyers step in, maybe you could see a move back to that over the next few weeks. Now, the strikes selected were the 140 strikes on the calendar. They overlapped at the same strike. Now the expirations come into play because you also want this to happen kind of going into that expiration of that first option. So in this case, it's the December 6th, December 13th call calendar spread. So it's a 1 week wide call calendar at the 140 strike, $1 debit. So another, I think, somewhat appealing thing about this strategy for those who use them is that you control the risk and you can keep it more, a little bit smaller. In the case of the Apple trade, we were risking 250. In the case of Nvidia, you can see that $1 debit, you're only risking $100. Now, it's still $100 at risk, and you do got to be a little bit more precise. You need to move to 140 or that area over the next few weeks for this one to have a chance to be profitable. And the other nice thing, too, very customizable. So I selected 140 for this example. If you got a different opinion, different strike in mind, or different expiration, be that an Nvidia or another name, you can simply move that around to better, reflect your personal projection. In this case, we're looking for that move to 140 for the example's purpose. But that'll do it for this episode of Daily Trader. I hope everybody has a great Thanksgiving holiday, and thanks for tuning in every single day to the Schwab Network, and we'll see you on Friday.